President Trump said he's delivered the largest tax for seniors in recent history. And I'm trying to quote him directly. He said, "We delivered no tax on tips, no tax on overtime, and no tax on Social Security for our great seniors." You probably heard that the big, beautiful bill includes a lot of benefits for seniors, but the biggest question we've been getting is, when are these benefits going to kick in? So I have done the research and I have the timeline on when you can expect money to hit your pocket, when you can expect the tax deductions to be available, and other benefits that are in the bill, what the timeline is. So if you've been wondering what's in the big, beautiful bill, or you're confused about the various elements that affect seniors, I am going to break it all down in this video. So after you've watched this video, there should be no confusion about what is available to seniors, when they are going to be rolled out, and how specifically they impact you. I'm also going to talk about how the big, beautiful bill impacts homeowners, because that's one of the questions that I've been getting. And you've probably heard the confusion around no taxes on Social Security. Did Congress really eliminate completely taxes on Social Security? I am going to also address that in detail. My name is Kwame Kwade. I am a government benefits expert. For 15 years, I've been helping seniors get the retirement benefits they deserve. I cover topics on Social Security, Medicare, Medicaid, food stamps, and other personal finance issues that affect seniors, both things that are happening in and out of Congress. If you are new to this channel, welcome. I am really happy you're here. Do me a favor, go into the comment section and let me know your city and your state, because we like to know where you guys are watching this broadcast from. And if you've been watching this channel regularly, thank you for your continuous support. Now, let's jump into the headlines. So the first thing is timeline. This bill is 1,000 pages. There's a lot to go through. But one thing I've done is been able to pull the timelines for you so that you know what is going to kick in. Some of the things are going to expire in 2028 once the president's term in office ends. So there's a whole lot of discussions we're going to have in a few years, because not everything is permanent in this bill. So my job is to show you what is temporary and what is permanent so that you can plan accordingly. So let's get to the 2025-2026 period. Tax cuts. There's tax refunds obviously coming in April 2026. And because of this tax bill, a lot of seniors are going to get bigger refunds during the tax season next April. There is $750 tax standard deduction that most people can claim. On top of that, there is the big $6,000 tax deduction that's available to seniors that make income up to $75,000, and for couples up to $150,000. And this is all happening in 2025-2026. There is also the SALT deduction, the state and local tax deduction. What does this mean? If you live in a state where local taxes are high, where state taxes are high, pay attention to this. You can now deduct up to $40,000 in your state and local taxes on your federal income taxes. That is an increase from the current $10,000. That is a huge jump. So if you're a senior citizen and you live in one of these states, this is good news for you. And that is an immediate deduction that is going to also happen next year. And then you have no tax on tips. That is going to run through 2028. So if you're working as a senior and you are earning tips, the first $25,000 can be deducted tax-free. But that ends in 3 years. And then you have the no tax on overtime. That is part of what I call the three-legged stool that the president campaigned on. No tax on Social Security, no tax on tips, no tax on overtime. Well, two of those three have been clearly delivered on. I'll talk about the third one, which is no tax on Social Security. That is a more complicated, nuanced result. So we'll talk about that. Another thing is larger tax credit. So families with children under a certain age are going to get an additional $500 in tax credit. That will be $2,500 total. So those things I just mentioned are happening right away. Then the next phase of deductions are going to kick in from, benefits and cuts are going to kick in 2027, 2028. Obviously, you've heard about the Medicaid cuts and work requirement. Those are going to kick in 2027, 2028. So there's a lot of things that I think, if you look at the way things are timed, maybe they are timed some before the election, midterm election, some after the midterm election, because some of these cuts are happening after the midterm election. But I'll talk about that later. Let's talk about the things that you're getting now. In 2025, 2026, there's the clean energy credits. So that, the EV credits is going to be here until September 30, 2025, and then they're going to phase out. Solar panel tax credit are also going to end in 2025. Wind and solar farm credits are also going to end by June 2026. So that is some of the credits that are being phased out. So let's talk about no tax on Social Security and what's going on with that. The president, I quoted, said, "We've delivered no tax on tips, no tax on overtime, and no tax on Social Security for our great seniors." The question is that what really happened? Well, the bill does not completely eliminate taxes on Social Security. It provides many older Americans who qualify for Social Security with a tax break. So I want to be clear on that. You're getting a tax break. It does not eliminate taxes on Social Security completely. And the reason was that Senate rules does not allow Social Security taxation to be done under the reconciliation process. And since they were passing this bill under the reconciliation process, it was not possible to do that. And so the next thing they did was give you an additional $6,000 tax deduction to people aged 65 and older. And then the deduction comes on top of the existing tax deductions for Americans older than 65. So currently, if you're 65 and older, you get an additional deduction on top of the standard deduction. That is $2,000 if you're married, or $1,600 if unmarried and not a surviving spouse. Well, now there's a $6,000 deduction on top of that. But this runs through 2028. So it does sunset at 2028. And so I said we're going to have a lot of discussions in 2028. Well, this is one of them. That the $6,000 tax deduction that was supposed to be in place of or help with your Social Security taxes is going to end in 2028. Now, it is incorrect to say that no tax on Social Security has been eliminated, because the 6,000 tax credit applied to people over 65. There are seniors that are currently receiving Social Security benefits that are under 65. Remember, the earliest you can take Social Security is 62. And there are some people with special qualifications that can even take it earlier. So it is technically not correct to say that all taxes on Social Security has been eliminated, but it is correct to say that Social Security taxes have been reduced because, one group that would not receive the tax break is people who are getting Social Security under age 65. And 5% of retirees right now are between age 62 to 64. So there are people who are not going to get it. And then there are people who make too much money to qualify for the 6,000 tax deduction. So there's those two categories of people who are under 65 who cannot qualify for it because it starts at 65, and then people who make too much money because the $6,000 is phased out after you make $75,000 as an individual and $150,000 as a couple. So that is what I wanted to clarify, so that there's no confusion around who is getting the benefit, and the fact that if you are currently paying taxes on Social Security, there may be more taxes you have to continue to pay because the bill does not completely eliminate taxes on Social Security. Now, let's talk about how this bill affects homeowners. That's one of the questions that I have gotten a lot. And so there are several categories of things that homeowners are concerned about when it comes to taxes. And so let's talk about them. The first one is home sale capital gains. When you sell your home, your primary residence, there are capital gains taxes that come with it, but above a certain threshold. So if you're under the threshold, you do not have to pay taxes on your primary residence if you sell it and make a profit. That threshold is $250,000 if you're single, if you're filing as single, and $500,000 as a couple. Those thresholds were not touched, so they are still in effect, and it's one of the things that people were worried about that the big beautiful bill was going to eliminate or reduce. And I want to tell you that that did not change. So if you are trying to sell your primary residence, you can still take that deduction. The next one people were worried about was mortgage interest deduction. This is a big part of home ownership in America, where people expect, as one of the benefits of home ownership, is to deduct interest on the home loan. Well, politicians like to play around with that number and how much you can deduct. So here, the interest remains deductible, but only on mortgages up to $750,000. The previous limit was $1 million. So this is a reduction, but it's unchanged from recent years. So it's been at $750,000 in recent years, but it used to be $1 million. And people were hoping that it will be restored back to $1 million, because a lot of places in the country, $1 million home may sound a lot in some parts, but in some places, it's just the average home for the average middle class family. Another area where people were expecting some movement was moving expenses. The deduction for moving expenses used to be broader, but now it's been limited to certain military move. So if you were hoping that you can deduct moving expenses from your federal taxes, that is not going to happen, because that was not included in this bill. Now, there's one more thing about real estate that was addressed in this bill, and that has to do with the inheritance tax. There's a lot of people that have been pushing Congress to increase the inheritance tax threshold, meaning that how much can you leave behind as inheritance, real estate assets for your children without getting taxed. The limit used to be $7 million, and now that has been increased to $15 million. So you can leave up to $15 million in inheritance and not get taxed on it. So now let's look at the key changes that came with the bill. You know, there's now lower tax brackets and a larger standard deductions that are now permanent. So let's talk about the standard deduction. Standard deduction increased by $1,500 for joint filers and $750 for single filers starting in 2025. Married couples filing jointly are now $31,500 for single filers and $15,750. So if you're age 65, this still applies to you. And then, as I mentioned, there's additional deduction for seniors that are age 65 and older. That has been in existence already before the $6,000 came in. So it's $1,600 if you're filing by yourself, and if $2,000 if you're filing joint. And then on top of that, they added the $6,000. And the $6,000 phases out at $75,000 in income if you're filing single, and $150,000 if you're filing as a couple. Now, one of the biggest questions I've received is that, can couples deduct $12,000? Because single filers get $6,000 tax credit. If you're filing as a couple, do you get $12,000? And the answer is yes, you do get $12,000. and then it phases out at the numbers that I've given you. Other changes in the tax bill is that there is a permanent decrease in taxes for companies. Corporations can get up to, it used to be that the corporate tax rate was 35%. And in the first Trump term, it was reduced to 21%. And that has been made permanent. And as I mentioned, if you live in a high local tax state, you can deduct up to $40,000 of your local and state taxes through 2029. And then child credit has also been increased. So there's many things here that are good news for seniors that, a lot of seniors can be happy about. But what is the other side of that coin? We all know that some things were cut, some things were taken away, and some things were made harder to get. So let's talk about that, because I think it will be incomplete to just tell you about the good things in the bill and then not tell you the other things that are going to cause a lot of people discomfort. So one of the things is that Medicaid is going to have a work requirement, and that is going to kick in 2027 after the midterm election. And then 3 million plus seniors are going to lose food stamps starting in 2028. And then starting in 2028, states are going to be forced to share some of the costs for food stamps. That is the first time this is happening, where states are being asked to share some of the burden of paying for SNAP. And what you can expect is that states that cannot afford it are just going to make food stamps harder to get in their state, or they're going to just cut benefits. And then 12 million people are scheduled to lose Medicaid. And this is where I want to spend some time, because this is probably the biggest cut that is coming in this bill. Medicaid supports 74 million people. It is the largest insurance program in the United States and supports millions of seniors, especially on Medicare, who get their Medicare premiums paid for by Medicaid, their dental, vision, hearing, prescription drugs, all paid for by Medicaid because they are on low income. Well, this bill took $1 trillion from Medicaid, is the largest cut in Medicaid in history. And so with that kind of cut, there's going to be a lot of pain. And I think seniors are going to be disproportionately affected because for 3 reasons. Number one is that the work requirement is going to push a lot of seniors who cannot work, especially those on disability benefits, going to push them off Medicaid. Veterans, because it used to be that you have to be up to age 54 years old in order to get Medicaid and still work. Now that age has been pushed by 10 years. So you have to work up until age 64 and a half to continue to get Medicaid. So that's going to be a big deal. So that's one of the reasons why millions of seniors are going to be knocked off Medicaid. The other reason is that, as I mentioned earlier, a lot of seniors depend on Medicaid to pay for their Medicare premiums, their Medicare prescription drugs, vision, dental, and hearing coverage. Well, with $1 trillion being taken out of Medicaid, those seniors are going to have challenges because eligibility requirements are going to be restricted and certain services are going to be taken away because the program simply cannot afford it. And the third reason why seniors are going to be knocked off Medicaid is that 62% of nursing homes bills are paid for by Medicaid. You may not know this, but a lot of seniors that are low income that end up in assisted living, senior homes, long-term care facilities end up being paid for by Medicaid. And so by taking a ton of money out of Medicaid, it's making less money available for that. And rural hospitals are the biggest losers in this particular scenario, because rural hospitals depend on Medicaid for about 85% of their income, because they serve largely Medicaid clients. Well, if Medicaid is being cut, then it makes it harder for these hospitals to stay in operation. And the effects are already being felt, because there's a hospital in Nebraska that already is planning to shut down. And it announced that they had to close because Medicaid cuts are going to impact them disproportionately, and they would not be able to continue operating. So you're going to see that a lot. Rural hospitals are either going to cut hours, cut services, or shut down completely, because they're going to lose a ton of their Medicaid clients that they have been depending on for years. So let's talk about the tax cuts that are in this bill and who it benefits. If you are a senior and you make less than $25,000, there is not a lot of money in here for you. If you're a senior making between $25,000 and $53,000, you are getting about a $500 tax cut in total. If you make between $53,000 and $95,000, you are getting about $1,000 in tax cuts. However, if you make about $200,000, over $200,000, you get about $12,000 in tax break. And if you made about $1 million, you are getting about $188,000 in tax break. So disproportionately, the wealthy are going to benefit in this tax bill. And I don't think a lot of you should be surprised by that. I mean, it's been consistent that when there are huge tax cut legislations in Congress, they tend to overwhelmingly favor the top income earners. So that is not a big surprise there. The question is, what is in this bill for people who do not make $50,000? How about people who do not make, even $25,000? What's in this bill for you, or what could have been included in this bill for you? Now, I've talked about this a lot of times, and I'll keep talking about it. I think that Congress missed a real opportunity to really provide relief to seniors that are in the low income category, and give them the increase that was promised, the Social Security increase that was promised, the tax break that was promised, and help with certain services that would have made a big difference for seniors in low income categories. So I am going to do a video and dedicate a whole video to talk about, seniors in low income category and the help that is available to you, and also the things that Congress can do in order to help seniors on low income, disability benefits, veterans that are struggling to make it from Social Security check to Social Security check because of a whole host of reasons. Part of it is also inflation that has gone up and kept a lot of prices up. So I want to make sure that you know that that video is coming, where I'm going to dedicate a whole video to talk about what could have been done to support you and help you, and that there's still time this year for Congress to be able to help seniors that are low income that need help. So stay tuned for that. But I want to hear from you in the comments. How has this bill affected you? What are you gaining from this bill? And what do you think is going to negatively impact you? Are there things that you're worried about? And are there things that make you happy? Because there are a lot of things in the bill that seniors can rejoice, because if you're paying taxes, you are getting a tax break. And as the president said, it's the largest tax cut for seniors in a while. And so a lot of seniors are going to be happy, especially if you're seeing your taxes go down. Now, if you are not paying taxes on your benefits, then you are pretty much left out of this bill. And that's what I wanted to create a separate video to talk to you about. But before I let you go, I also want to address Medicaid and Medicare and talk about our partner, Chapter Medicare, and how they can help you save money. Part of what we do here is to find resources that can help you save money and put money in your pocket. Well, the Trump administration recently sued a whole host of Medicare advisory companies for defrauding seniors, for putting you in Medicare plans that did not benefit you. And so we wanted to bring you a resource that can actually help you navigate the challenges of Medicare and put money in your pocket. And Chapter, the number that you see on the screen, is that partner. One of the co-founders actually was motivated to start the company because he watched his parents struggle in choosing a Medicare plan, and they wound up paying premiums that were hundreds of dollars more than they should have paid. And that was one of the reasons why he started this company. And we've sent a lot of our viewers to them. Over 2,000 of you have reached out to them and gotten help and moved to a better Medicare plan. And you too can be part of that. When you call the number, their advice is unbiased. So they are not trying to push you any plan. They're trying to figure out if you are in the right plan or not. And if you're not, then they'll help you get into the right plan that fits your needs and fits your budget. So why should you call them? Well, these are the people you will be talking to when you call Chapter today. Real humans that are going to be on the phone with you, walking with you through this. And the Better Business Bureau rates them A+. There's tons of 5-star reviews that we have shared with you on previous videos, and they can save you $1,100 a year, which today it is not, a small amount of money. So the number you see on your screen, 539-205-2147, call them today. And you can also go to askchapter.org/insider if you would rather just fill out a form. I'm going to put that form in the comments. I'm also going to put in the description. It's a short form. You fill it out. They'll reach out to you, schedule a call with you, and explain to you what options are available in your local area that fits your budget, the doctor networks you want to be in, etc., and help you get into a better Medicare plan. So that is what I wanted to share with you today. As I mentioned, we're going to do a separate video focused on low-income seniors and the help that you can get, given that a lot of this big, beautiful bill did not really apply to you, but there's more that is out there in terms of resources that we can provide you, and also what Congress can do to bring you real relief. So stay tuned, and until I see you in the next video, thank you for watching.